Good morning, Gabe. I checked out your profit tip video on what to do with my YouTube profit. But I have a question about the investment part. What is the difference between a mutual fund and an ETF?
Peter, that's a really good question. Each is a way to invest. But there are big differences when it comes to how active you'd like to be as an investor.
I would like to take a more hands-on approach. But I do not want to get too aggressive.
I understand. Let me give you some helpful information. By the end, I hope I can show you which investment vehicle may save you a bunch of money in taxes. Welcome back, YouTube community. Gabe here. Last week, we talked about your YouTube business and how search engine optimization is the foundation of a good YouTube channel. Today, I want to share with you the difference between a mutual fund and an ETF. Choosing one over the other may actually save you money in taxes. Shall we begin? Peter, why do you think taking a hands-on approach is best for you?
After watching your profit tip video, I used your Acorns link and opened an account. That made me want to learn more about the various strategies you can use for your investments. Can you help me understand which is better?
It is good that you have taken the leap into investing. The primary goal of investing is to build long-term wealth. Both mutual funds and ETFs can help you on your path. Let me explain the difference. Purchasing stocks on a stock exchange has been made easier and easier. However, picking the right stocks that can grow over time is not so obvious. A mutual fund will allow an investor to pool their funds with other investors in order to purchase a basket of stocks, bonds, or other investment vehicles. This basket of securities allows an individual to diversify their investment for a much lower cost than purchasing all of the shares one by one. The same can be said for exchange-traded funds. An ETF is also a pool of stocks, bonds, or other investment vehicles. But there is one major difference. ETFs are treated almost like an individual stock. You may purchase an ETF at any price throughout the day. A mutual fund is priced at the end of the trading day. You may place an order for a purchase of a mutual fund, but the price you are given will be the net asset value price of that mutual fund as of the close of the stock market for that day.
If you can pick the time of day of your purchase, why wouldn't an ETF be more popular? I hear that there are way more mutual funds than ETFs.
That may simply be a matter of time. Mutual funds have been around in the United States since the late 1800s. After the Wall Street crash of 1929, the United States Congress passed a series of acts regulating the securities markets in general and mutual funds in particular. The popularity of mutual funds grew in the 50s and 60s up until the 1980s. Various tax law changes in the 80s, specifically around the funding of retirement accounts, caused a surge in the use of mutual funds. They became a primary vehicle for 401k plans, defined contribution plans, and individual retirement accounts. At the end of 2019, approximately $26.7 trillion was invested in mutual funds in the United States. By comparison, ETFs have been available in the United States since 1993. At the end of 2019, approximately $4 trillion was invested in ETFs in the United States. But going back to your question, it might not be the purchase timing option that makes one more popular over the other.
I was about to ask you about the costs. Isn't it more expensive to own a mutual fund over an ETF?
That is the other major difference. Mutual funds, which are actively managed, pay a portfolio manager to supervise the fund's investments. This gives investors a chance to diversify and participate in investments that might only be available to large investors. These annual management fees, called expense ratios, can range from 0.50% to 2.0% of your portfolio. There can also be load fees of 1 to 2% of the cost of the fund you purchase. ETFs have exchange ratios in the range of 0.05% to 1%. And many brokerage houses offer no-cost trading, so there are no load fees. The lower the expense ratios, the higher the return on your investment.
Points to the ETF again. Doesn't that make the ETF still the better investment?
Not so fast. Most ETFs are index funds that attempt to replicate the performance of a specific index, like the Nasdaq or the S&P 500. Indexes may be based on the values of stocks, bonds, commodities, or currencies. An index fund seeks to track the performance of an index by holding in its portfolio either the contents of the index or a representative sample of the securities in the index. An actively managed mutual fund can perform better or worse than the index. You can use a research vehicle like Morningstar to find mutual funds that outperform the underlying index year over year. There are actively managed ETFs, but they will have expense ratios more in line with mutual funds.
Gabe, you are helping me a lot. A low-cost vehicle to get a basket of stocks. The chance for specific price purchase. The chance to match a stock index without having to pick and choose individual stocks. I like ETFs more and more as we speak.
Yes, Peter. There are a number of advantages to purchasing an ETF. But let me share one last reason why a mutual fund can be a powerful tool. Automatic reinvesting and incremental share purchasing. As your mutual fund investments grow, you can set up automatic reinvesting. Any interest and dividends earned will be used to invest in more of the shares you have in your mutual fund. You can purchase incremental shares of less than the full net asset value price per share. With an ETF, you must purchase the full dollar amount of the cost of the share. No incremental purchases are allowed with an ETF. For people who do not want to actively manage an investment, the automatic reinvesting allows their portfolio to grow without trying to time the market. Whether the market is up or down, your portfolio stays on the steady path of growth.
Points to the mutual fund. Well, you said in the beginning that there was one investment vehicle that could save me a bunch in taxes. Which one is that?
Let's go back to our basket. In a mutual fund, the portfolio manager can purchase and sell stocks within the basket in order to maximize the return on the total fund. Inside that basket, there can be capital gains or capital losses. These capital gains and losses are then passed on to you, the investor, every year. You have to report those gains and losses, and pay the taxes on those gains and losses whether you took money out of the fund or not. With an ETF, you control the sale of shares in your portfolio. You report no gains or losses until you actually sell shares of your ETF. Both the mutual fund and the ETF can have interest or dividends that must be reported annually, but the capital gains are out of your control. That can be the deal breaker. This is why a mutual fund works best with a retirement account. The interest, dividends, capital gains and losses do not have to be reported as taxable income until you actually take the money out as retirement income.
This is very helpful. I can keep the Acorns account for the advantage of incremental investments. But it might be better to switch that to a formal retirement account, like an IRA. And I can start investing in ETFs using a commission-free brokerage account. Thank you, Gabe. I will keep checking out Morningstar. There was good information about ETFs that will help me before I jump in.
You're welcome. There are advantages to a mutual fund like professional management and incremental reinvesting. An ETF can save you on taxes. If you are willing to be an active investor, you can pick your purchase and sales price anytime during the trading day. But in all cases, it's best to do your homework thoroughly before you leap into investing. Please use this information for educational purposes. Consult your tax professional, investment advisor, or attorney for further guidance in your specific situation. I hope what I shared can help you better understand your YouTube business and the difference between a mutual fund and an ETF. Please leave any questions in the comments section below. Let me know if there is a subject you would like to see a video on in the coming weeks. Please like and subscribe with a click to the thumbs up below. Have a great week. See you next week with more tips for your YouTube business. Cheers!